Welcome back to Explain the Charts. Today we're looking at the EURUSD, the euro to US dollar pair, and discussing the latest news and analyzing the chart data. So what's happening in the news? Well, the US dollar has been on a tear this week, gaining significant strength following a stronger-than-expected jobs report released on Friday. This positive economic data has bolstered the dollar, putting downward pressure on the EURUSD. The news surrounding the U.S. economy has been overwhelmingly positive, suggesting that the Federal Reserve may hold off on any rate cuts in the near future. This has encouraged investors to flock to the dollar, pushing it to a 7-week high. Now let's turn our attention to the charts, starting with the daily chart. If we look at the daily chart, we can see that the EURUSD has been in a downtrend for the past 6 days, dropping below the 1.1000 level and testing its weakest level in 3 weeks. This downtrend has been driven by the strong US dollar, as mentioned earlier. The chart is currently testing a key support zone, which coincides with the January high-week reversal close and the 38.2% retracement of the 2024 yearly range. This support zone is a critical level to watch, as a break below it could invalidate the June uptrend and suggest a more significant high was registered last month. If the price breaks below this support zone, we could see a deeper pullback within the uptrend, potentially exposing levels near 1.0943. On the other hand, a hold above this support zone would reinforce the June uptrend, suggesting a potential bounce back towards resistance levels. The immediate weekly resistance is eyed at 1.1038, followed by a stronger resistance level at 1.1135/39. A break above key resistance at 1.1228/75 would be needed to mark uptrend resumption. Let's zoom in on the 1-hour chart and examine the recent price action. The 1-hour chart shows a continuation of the downward trend, with a series of lower highs and lower lows. The price has broken below the previous support level, which suggests a strong bearish bias. We can see that the price is currently trading below the 20-period moving average, which further reinforces the bearish sentiment. The RSI indicator is also in oversold territory, which suggests that the pair may be due for a short-term bounce. However, the overall trend remains bearish, and we could see the price continue to test lower levels. Let's take a closer look at the 15-minute chart to get a more granular perspective. The 15-minute chart shows that the EURUSD is currently trading in a narrow range. We can see that the price is oscillating around a key support level, which has been holding up the price for the past few hours. The price is also consolidating below the 20-period moving average, which suggests that the bears are in control. The RSI indicator is also in the neutral zone, which suggests that the price could move in either direction in the short term. However, the recent downtrend suggests that the bears are likely to gain momentum. The next key support level is located near 1.0975, and a break below this level could trigger a deeper decline. On the other hand, a break above the resistance level near 1.1040 could signal a short-term bullish reversal. The overall sentiment remains bearish, and we could see the price continue to move lower in the coming days. In conclusion, the EURUSD is facing a bearish bias, primarily due to the recent strength in the US dollar. The daily chart suggests a potential break below the critical support zone, which could invalidate the June uptrend. The 1-hour chart reinforces the bearish bias, with a continued downtrend and oversold RSI. The 15-minute chart shows a narrow range, with the price consolidating below the 20-period moving average. The next key support level to watch is near 1.0975, and a break below this level could trigger a deeper decline. If the EURUSD manages to hold above the key support zone, we could see a short-term bounce, potentially targeting resistance levels near 1.1038 and 1.1135/39. The key thing to watch in the coming days is the reaction of the EURUSD to the support zone on the daily chart and the 1.0975 level on the 15-minute chart. If the price breaks below these levels, it would reinforce the bearish bias, potentially leading to a deeper decline. However, a hold above these levels could signal a short-term bullish reversal. The FOMC minutes and fresh inflation data, including the U.S. Consumer Price Index, CPI, are scheduled to be released in the next week, which could have a significant impact on the market.